The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Kevin in Orlando. Hey, Kevin, what's going on?
Hey, I'm doing great. You know, I am addicted to TFNN.
We appreciate you growling and prowling with us out here. It's a great network, man. And I want to thank everyone out there, for making it a great network.
Well, it's great because I do outside sales, so I get to have the station on my phone the whole day. And when I go pick up the kids from school at 3 o'clock, they all love it and giving the old wow. Educating the kids at a young age is a good thing.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. So everyone's having a great day, safe day. It's making a great week, folks. Don't make assumptions. Let your life be transformed. When you stop making assumptions, your word becomes impeccable. And your life is completely transformed. Magic just happens in your life. What you need comes to you easily because the Spirit moves freely through you. It's a beautiful thing. Market-wise, let's take a look at it out here. We have the Dow Industrials up 81, NASDAQ up 34, S&P's up 9.5, gold contract up $2.30, trading at $1,345 an ounce. Silver up 14 cents at $19.84 an ounce. Platinum down $10 at $1,113 an ounce. Copper flat at $2.16 a pound. Light sweet crude up $1.25, $45.75 a barrel. Bonds, 10-year note down 10 ticks, 132.07. 30-year bond up full point, 8 ticks, 171.23. King dollar down 87 ticks at 95.59. The euro is up 21 at $1.11, and the yen is trading at 101. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Another day, another dollar. You're up again. Bottom line with what? With zero volume, folks. So, your SPY's trading at $219.38. You've done 32 million shares thus far. Bottom line is that we'll end up doing, 40 million shares or something. And it's creeping higher. That's the bottom line. Can it get higher? Yes. We'll see how this handles the... it would have to close under the 218, even 94, and I don't expect that's going to happen at the end of today. Bottom line is that, yeah, you're slightly over where we've been since the 14th of July, but guess what? You're over it. That's saying you can still go higher. You take a look at the NDX 100. Same setup in the NDX. NDX is up 62 cents today, $117.82. We've done 9 million shares. We're going to do about 11 million shares, and this baby should be doing, who knows, 20 million, 13 million. Bottom line, creeping higher, light volume. Gold contract. What do we have with gold? Gold contract had a price spread out here today, folks, of $13.49 was the high, $13.40 was the low. We've done 115,000 contracts. That's light volume. Bottom line, gold looks that it wants to get down to the lower end of this consolidation, which would be 13.18 on this contract. My take is that we're actually going to go somewhere into the 12.88 area. Bonds. What do we have with bonds? Well, bonds, notes and bonds are saying quite a bit out here today. And what they're saying is that they continue to want higher price, lower yield. What we have out here today is that the notes and the bonds are pulling back. And you talk about anemic, it's pretty intense. So the 10-year is back 10 ticks, 698,000. Let's call it 700,000. Well, the 700,000 is coming into 1.3 million contracts as well as 979,000 contracts. So you're pulling back with lighter volume. That is saying notes still want higher price. Bonds, same type of setup in the bond, the 30-year bond market. We have with the 30-year bond is that you're down today a full point plus 8 ticks. You've done 142,000 contracts. Well, that's coming into 259,000. Same type of setup. That also wants higher price. King Dollar. We go over to King Dollar. What you're going to see once again, King Dollar is rejected. Lower price once again. Anemic volume, by the way. King Dollar is only down 7,000 contracts out here today. You got a low that was established at 95.42. You're at 95.59. Bottom line, King Dollar is building some cars to get up into higher price. Our phone number is 877-927-6648. Let's go take a look at some of the higher volume stocks in this low volume market. Twitter's got quite a move out there. We'll go back over to Twitter in a few minutes. Twitter's up $1.30. You have Micron Technology up 67 cents. Advanced Micro's up 20. You have, let's see, U.S. Steel is up $1.22, trading at 22.88. We have Cliffs Natural up 39 cents. You have GE up 2. Some of the Dow stocks, we take a look at some of the Dow stocks, what we have out here. You have Coca-Cola up 23 cents. DuPont's up $1.18. You have GM up 26 cents. Big Blue is up 12 cents. If we go over to the oil market, what you're going to see inside oil, folks, oil has come up to ice. And now it's going to be really pretty cool watching how this shakes out. So when we take a look at this oil market, this contract in June 9th was trading at $52.73. Goes straight down June 9th, makes a low on August 3rd at $39.19. You're doing a counter trend bounce. The volume's dying on the vine right now, and we're right at ICE. This is how ICE is set up, folks. ICE is set up from 45.57 to 46.96. And that, ICE in particular, that's just a place where you broke down from, and you can expect when you get a counter trend bounce, you come all the way back up to that area, and we'll see whether, in fact, it's going to reject that price of 46.96, because that would be the top of ICE. If you got higher than 46.96, guess what? Game would be on here. But right now, what you have is that the correlation inside of how this market is dying on the vine. This is what you have. Last Wednesday, we got to $43.86. You did 682,000 contracts. Well, Friday, you got to a higher high with 536,000 contracts. Today, you get 472. So bottom line, pedal to the metal, we're coming right into it. We take a look at the Dow Industrials, the strength versus the weakness. What we have out here, the strength inside the Dow Industrials today is DuPont, that's up 1.7%. Goldman's up 1.5%, Caterpillar's up 1.5%, and Boeing is up 1.3%. We take a look at the laggards. You get Walmart down 0.8%. UNH is off, United Health is off 0.7, McDonald's off 0.6, and Johnson & Johnson is down 0.5. Inside the NDX 100, this is what we have. Strength, Micron is up 4.4%. Illumina is up 4.3%. Western Digital is up 3.8%, and Liberty is up 3.7%. Taken away from it on the way down, Netflix is down 1.2%. You get Fox off 0.9%, Facebook is off 0.8%, and Priceline is off 0.6. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials right now are up 76. You get the NASDAQ up 33. S&Ps are up 8.5. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is up 66. You get the Nasdaq up 30. S&Ps are up 7. And as we do each and every Monday at 20 past the first hour, we have our man, Mr. Steve Rhodes. Don't forget, folks, Steve has an outstanding show every trading day right here at TFNN, 1 to 2 Eastern Standard Time. You can get that programming right on your cell phone. Monday, Wednesday, Friday, we do live content from 8 o'clock in the morning to 5 in the afternoon. Tuesday, Thursday, 7 o'clock in the morning to 6 in the afternoon. All that content you get right on your cell phone. You go to TFNN.com, hit Tiger TV, right on your browser. You're going to get great audio and video. Steve also got a great newsletter, Mastering Probability. Now, the way you get that, come to our website. You'll see newsletters at the top. You hit newsletters, hit trading newsletters. You can test drive Mastering Probability, 30 days, absolutely free. Steve Rhodes, what's going on?
Well, today, Tom, is a day for this game here between the Bulls and the Bears in the market called Liar's Poker.
Lies, I like it. Oh, yeah, man.
Did you ever play Liar's Poker?
Oh, so many times. My whole family did. I grew up with Liar's Poker when I was probably 3 years old, watching my uncles.
Perfect, perfect. Well, today's the day that the market is playing Liar's Poker, and we're going to figure out whether it is the Bulls or the Bears that are the ones that are lying. Now, this first chart that we're looking at, you and I have looked at this on a number of occasions. It's particularly interesting today.
Okay.
In that, well, really, the top portion is the annual seasonal cycle.
Okay.
So that assumes that we did not have a presidential election. The actual high would be scheduled for July 20th. Now, the Dow, up until a couple days ago, July 20th was, in fact, the high. And this seasonal cycle that we're looking at is actually for the Dow. That allows me to get 84 years worth of data and make sure that I'm taking into account, all of the annual activity.
Yeah.
And so, but what we do know about the annual seasonal cycles, even though July 20th, which was an influencing date to start to push the market lower, we know that high has been taken out. And that says that secondary cycle is really the more dominant pattern at the moment, which makes sense because it's that the second term of or the fourth year in a second term president, or year number 8. And that's the bottom panel. And that's really been in play here for a while. And today, believe it or not, August 15th, was supposed to be a cycle high during this presidential cycle period.
Okay.
So now, and what this also shows, folks, if you're just listening on your radio, What this also shows is that the market's going to pull back for several days before it then continues to move on and make an even higher high right around September the 9th. But I want to focus just on today and see, can we find things in the market that help us figure out what the tell is? And the first chart that we're looking at here happens to be the volatility index. Now today, and the chart that we're looking at, this goes back into September of 2015. So if I start all the way on the left-hand side of the chart, the top portion of the screen is the S&P 500.
Yeah.
The bottom portion is the VIX index. And what this shows, this is just on a closing basis. So, for example, on September 1st, 2015, we had a close inside the S&P of about 1914. And then it actually had a lower closing low back on September 28th, 1881. But if we take a look at the volatility index, what it was doing was making lower highs as well. That was the tell that suggested to us that there was a bottom that was forming inside of the market. This works both at bottoms as it does at highs. For example, back here at the high that was being formed back in June of 2016, June 8th,
yes,
we saw the S&P 500 make a higher high. But if we take a look at the VIX index, and it was a small little nuance, but it was a nuance worth paying attention to. What the VIX index was doing was also making higher lows out there. Now, you can't use this as a timing tool. It's really more so like Paul Revere riding through the streets. It's just not saying when it is, in this case here, that the bears are going to arrive. Now, we have a piece of information that says, hey, they're traveling and they're all coming in and it's August 15th. They're just going to arrive a little bit later to the party out here. So if we take a look at where we're at today, we can see clearly the S&P 500 on a closing basis making a higher high. But the volatility index has made, today will be the third successive higher low out here. So this says to me, and maybe it's not today, but this says to me that, the bulls have got to be careful here. There's just, and this is not the only pattern that is in the marketplace. If I take a look at, this is an interesting one as well, and this is taking a look at the equal weighted ETF for the Qs. Tom, and that's the top portion of my screen.
Okay.
And the ticker symbol, folks, is QQEW. Now, I compare this to the bottom portion of my screen, which is the weighted ETF, the Qs. Now, interestingly enough, the equal weighted ETF made its high back on, I think it was June 23rd, June 24th, and we're trading just slightly underneath that high. So the equal weighted ETF has not gone on to make a higher high, whereas the Qs clearly have been able to go ahead and move to that higher ground out there. So that's another non-confirming signal inside of the market. There's more non-confirming signals. If I go back to the S&P 500, we were looking at the VIX earlier, and this chart here, again, takes a look at the S&P 500, top portion of my screen. Bottom portion of my screen is the New York Stock Exchange and the annual, or the new 52-week highs. Now, the New York Stock Exchange made its all-time high, not know if it's all-time high, but made a higher high back on July 1st. So the beginning of the month. So for 5-6 weeks now,
yes,
what the New York Stock Exchange has not been able to do during this huge run-up that we've had, it is making a declining tops pattern, even today. And this, too, as you can see on my chart, if folks are paying attention to it, those divergences are absolutely something that we want to pay attention to. With regard to the Dow, so I'm kind of going through, index by index, looking for these little nuanced signals that say, not so fast necessarily. For the Dow, one of the better indicators happens to be comparing the Dow to, believe it or not, General Electric.
Okay.
You wouldn't necessarily think that General Electric would have that much of an influence in the Dow, especially since it's number 29 of 30 that are inside there. But it's just really a good bailiwick with regard to being able to play that game of liar's poker. And when this makes lower highs, which it is doing, and the Dow makes higher highs, it says, hey, not so fast. Again, this doesn't give us the signals with regard to what's going to happen on a daily basis. With regard to the Qs, with regard to the S&P, I'll just look up let me put up the S&P just through the spies out here. If we take a look at a wonderful wave form that's out here, and the wave that I like is that seventh inning stretch, that seventh pattern. This is utilizing some of the Chapman wave out here. Today happens to get us into wave number 7. We've got the same thing. So we've taken a look at the Qs. We've taken a look at the Dow. We've taken a look at the SPY. And if we take a look at, just to round this thing off and look at the IWM, today it's also entered into that seventh wave movement. And the reason why we pay attention to wave number 7, Tom, is just simply that is where you can see the most significant changes in patterns that are out there. An example of that, I'll give you one quick example. You were talking about light sweet crude earlier.
Yes.
And I'll look at the monthly chart for light sweet crude. I'll put that up on my chart out here. And here is a pattern that shows from the lows out here in January of 2009 all the way to the high that was put in here in 2011. Took 7 waves. All the way down to the bottom, 7 waves. And this was back in February of 2014. So all this put together, I'm saying the Liar's Poker game is going to be won by the Bears, at least in the short term.
Look at those claws. Folks, come over to our website at TFNN. Go into newsletters, trading newsletters. You can test drive Steve's newsletter right here, right now. Mastering Probability, 1 month, absolutely free. And of course, don't forget, every trading day, 1 to 2 Eastern Standard Time, right on your cell phone. Steve, have a great one, a safe one. We look forward to the show tomorrow.
You too, Tom. Take care.
Thanks. Stay right there, folks. We'll come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is up 69. We have the Nasdaq up 30. S&Ps are up 7.5. Let's go to Marie in Erie, Pennsylvania. Hey, Marie, how you doing?
I'm doing fine. Thanks for taking my call.
Thanks for calling. Thanks for holding. Appreciate it.
Well, I'm kind of curious what you think about Micron. Will it reach the swing point from last year in December?
Okay, so let's take a look. You get Micron Technology. The Low for the year is $9.31. The high is $19.30. Okay, so put this. Yeah, you're looking at, yeah, it looks like it wants to. Okay, so Marie's looking at this. So picture this. So if we take a look at this, folks, the last 2 years, the equity went from $36 in December of 2014, goes down to a low of $9. Comes off the low with volume, and you're 16.20. Oh, I see what's happening. So you're just coming into that swing. 1943. I think you got a good shot at it. So what you have is this. Like when you come off bottoms, folks, okay, in this case, this came off the bottom. Well, first off, it tested. The last time it had volume on the way down goes $19.43. That was the lows of June. Then what does it do? It tries to get into that, and that's where in October of 2015 it gets to $19, does 214 million shares. Now watch this. So 214, and it was coming into the downdraft for 251. So that supply line, it just sold it right off again. That's what gave it lows. Now, that being said, what you're dealing with is that, you see how you're at the beginning of that $16.20 again, Marie?
Yeah.
That's what it wants to make its way through. Let me get this closer now. Okay, so that's on a monthly. So if we get it closer.
I was worried. I didn't think the volume was sufficient.
Yeah, it's, well, you know, let me just see this. So today you got some good juice in it. I mean, particularly for the volume out here is anemic out here today.
Right.
So it's kind of cool that this does have volume. So this is a small 1302, like a small ABC up from $1.76, which gets you 1581, which we hit 1569 thus far. Put this on a weekly. You know, the way I trade this, I just put a stop underneath this because, you know, it looks like it wants to hit that swing, you know.
That's what I thought. Whereabouts would you put stop, the low of today, or?
Yeah, I wouldn't give it much. There's no, because what will happen is that the 1620 is going to be a tough one to get through. Do you know, that's what it really comes down to. You could actually put it 1508, 1489. 1508. I'd put it, what I'd do is I'd put it under 1489. Okay. Where I'm going is this. So you see how it went up on July 27th? It got to 1489, right?
Okay, yeah.
You did 35 million shares. Then it backed off, folks. Then it broke topside again today. And the high of Friday is 1499. If you put it in, let's say put to 1479, because if it gets into 1479, like, okay, you can go right back to $13.
Right.
You know, because once it got back inside that range, it'd be like, okay, it failed.
Yeah, because I was getting nervous. I have a nice gain, you know, how that goes.
Yeah, and it's, you know, you can see that, you know, this is a highly volatile stock, folks, okay? We went from 1489 down to $13 in 5 days 2 weeks ago. You know, so that we know that's, you know,
it can do it.
That's percentage-wise, those are very big moves, and that's what happens with smaller price stocks anyway. It's not unusual, but just as you said, it's really cool when you have a big profit like that because percentage-wise, it's huge. So yeah.
But I have another question about something different. I had heard that there's going to be some new rules on money market accounts.
Okay.
Starting in October. Do you know anything about that?
What happens is this, is that, so right now, money market accounts, they've had this rule in that they can just about keep them always at $1, right? So,
right.
And that's what has made money markets so great. You know what I mean? What happens, folks, is that you put $100 in, you can have marked to $1. Well, that's going to change. And they will be able to, well, they're going to have to, if they go negative, they have to tell the client that they're going negative. So that's going to be a little tough, you know, because what happens is that there's there seems to be not enough bonds in the marketplace, and we're dealing with the rate environment that the money markets are having a tough time just staying flat. That's what's going on. So the disclosure will be that, guess what? You can have a money market, but that does not mean anymore that you're going to expect to get a dollar back for the dollar putting in. That's what's going on.
Okay.
You know, it doesn't, so that's the regulatory, you know, technical deal inside it. So, you know, it's what happened. Remember what happened, I guess, in 2010, the reserve fund, which was one of the biggest ones, they went negative. And, you know, then the regulatory agency basically took them because what happened is that the clients were thinking that they still were flat or paused. No, you're just flat. Just say left flat if you put $100 in, when in fact the securities that were backing the money market were under $1. You know, and when I say under $1, folks, what happens is this. So you get a picture of something. Is that the money market funds are going to go out there and buy bonds, something that generates more than they're going to try to generate something that's more than 1% or 1% or 0.1%, okay? Well, what ends up happening is that when you mark to market, meaning that, you know, these fluctuate up and down, well, they can go underneath that value. And, you know.
What do you do when you have a trading account and your cash is in a money market?
I believe what you can do is that you can tell them not to put it in a money market.
I see.
I believe that's how that works. You know, I know exactly what you're saying. You know, what happens, folks, when you have an account every night, you can see it in your statement. They sweep it over, and then in the morning they sweep it back. Okay, and all our broker-dealer accounts, I believe that when you're setting them up, you don't even realize that you're signing that you can say it, because I have them too, and I can see them in the accounts as they go back and forth, right? But what you also can do, I believe, is just tell them that you do not want that swept over. You want it to stay in cash.
Okay.
Yeah, and I'd find out about that, because it's going to be, I don't think it's going to be a huge issue, but it is going to be an issue, because it sounds more dangerous than it is, because I can't picture, you know, okay, so thus far what has happened is this. Let's say that there's 100,000 in an account. The reality is that, yeah, maybe it won't be 100,000, but it will probably be $99,990. You know what I'm saying?
Sure.
The fluctuation, because even the fluctuation in the first reserve account when it happened, folks, wasn't a lot of money, okay? But it had to do with disclosure for the clients that can happen, you know?
Well, I appreciate it. Thank you.
Okay, Marie, have a great one. Have a safe one. Stay right there, folks. We'll come right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Dow right now is up 71. You get the Nasdaq up 30. S&Ps are up 8. Let's go to Mike in Toronto. Hey, Mike, what's going on?
Yeah, hi. Thanks for taking my call.
How you been, man?
To talk about Vancouver real estate.
Okay.
Yeah, let's look at the ticker symbol, EQB, on Toronto.
So you get EQB. They provide first mortgage financing for properties across Canada. The company specializes in multi-unit residential and alternative single-dwelling mortgage financing. Okay, so the low is 43, the high 63. Okay, so without asking, I know you want to short the thing, right?
Mm-hmm.
Yeah, I wouldn't short it. You know.
Why?
Well, you know, right now, well, first off, it's illiquid. You know,
yeah.
you trade 33,000 shares a day.
Not even 33,000. Yesterday, Friday was like 5,000.
Yeah, so, you know, that's not something, I mean, that's just saying that, guess what? That's illiquid beyond belief, and you can move that anywhere you want. You know, It's only $61 stock.
Yeah, but it seems like today they tested the low of the high bar from June.
You know, if anyone called me with, but if anyone called me with any equity that only does 30,000 or sometimes 7,000 or 5,000 shares, you shouldn't be trading it.
Okay.
You know, because you can move this anywhere you want. I mean, you know, you and me, you can go in here and, you know, if you had a portfolio account, go in buy 100,000 shares like in a heartbeat for nothing, and blow everyone out of the water.
Okay.
You know?
How about ATD?
ATD, and another
Class
thing
B.
that, I'm sorry, say that again.
ATD.B.
Because what ATD? Because I believe what's also happening here is this
Alimentin Couche-Tard, the gas station.
Convenience stores, right?
Yeah, yeah. Bunch
Okay,
of, overpriced
24-hour
gas
convenience stores, fast food, lottery tickets, fuel stations. Okay, yeah. So the low is, yeah, it's in Canada. Okay, so low is 48, the high is 64. Okay, so we take a look at this. Yeah, I mean, this is a consolidation, you know. I'd let it get to the highs first. You're at 60. I mean, that 62.72 could get tested. I don't see anything in here like it wants to, you know, die on the vine here. And to get back to the real estate for a second, right? You brought up a mortgage company. Well, more than half the activity in Vancouver is cash. So, you know, the mortgage is a deal. There's no doubt, because paper is a big deal. But you're dealing with, Asian money coming in, they got to put it somewhere, and they're going to move. They're going to move to another city. That's what's going to end up happening. Okay, but you know, I wouldn't go short that mortgage company, man. You know.
You don't think so?
No, I definitely wouldn't.
All right.
Yeah. Cooking, brother.
Okay, thank you.
Have a great one, man. Have a safe one. What happens, folks, is this. So picture that when you're a cash buyer in the real estate market, these folks are not coming in, my take on this anyway, they're not coming in to buy and stay for 3 or 4, you know, months or years. They're coming in to buy. They have extra cash. There's nothing to do it in this world. They want to buy real estate, and guess what? 10 years from now, it's going to be double that price up there. You know, you know, depending on how long you've been kind of in the market in general, I remember so many times in Hong Kong, how many times they said the Hong Kong real estate is never going to continue going up. Well, guess what? I've seen Hong Kong real estate probably, I can't even count the times that it's gone down 20 to 30% in the last 35 years. Well, now it's 40 years. No, 35 years, okay? And every time it goes back, it goes up higher. And it's because that it's the amount of cash that's disposable, and they have nothing else to do with it, and they know that real estate's worth more than anything because of where, if you're in Asia, if you're in India, folks, what ends up happening, they really are almost slave-based economies. So what ends up happening is that if you have the production plant and you have 1,000 people working for you, which they do, paying nothing, still paying nothing, okay? When you get that cash, they have to get it out of the country. They have to get it out of the country. They have the cash. And that's kind of the larger issue when you see that type of money coming into, and it doesn't mean that it won't fluctuate up and down. It will. But once that community is established, which is absolutely established in Vancouver, that's not going anywhere, man. That's going, Vancouver is gorgeous. Now they have their own community. You get in a plane, you go groove. That's your place. If it's already paid for, who cares when it's paid for? Because there's not the aspect of monthly bills and all that, you know. So, you know, and they're making more money every day. That's the other side of it. So, is it you know bubblicious up there? Yeah, it probably is. But guess what? You do it, they'll knock it down 20-25%, then they'll come back in again and do it all over again. So. Our phone number is 877-927-6648. It'd be interesting that, here, let's go over to the euro and take a look at the euro. So, euro out here, trading at $1.11. And this, you know, so the euro and the dollar are both at a point where I suspect you very well could get a little turn. I mean, the euro wants to turn down, dollar wants to turn up. Let's get a Paul in San Jose. Hey, Paul, what's going on?
What's happening, Tom? How you doing, buddy?
I'm doing great, man. See, San Jose, you can tell us something about real estate. Okay, so folks, watch this. He is living in the place where the median house, 1,700 feet, is $1.1 million. It's the largest in the whole country. That's sick.
Insane here.
It is insane. So picture it. Now this is the median, not the high and low. That's the median price, folks. Okay. And bottom line is that, you know, San Jose was one of the first ones out there years ago that started. You know, you can go back 24 years, you know, and that's when it really started taking off in '98. Okay, the first, you know, bubble hits it anyway. So.
And now it's this whole area. It's really the whole entire area. You can't get anything here for less than $700,000.
Right, because it used to be Los Gatos, right? Is that what the name of it? Los Gatos? I thought that's where I was out there in '94, '95. I remember starting there, and then you could just see it over and over and over again. And you know, yeah.
I used to do home equity loans, and to me, it's getting a little frothy. I could see, you know, I don't know what your opinion is, but it's getting really hard for the younger generation to be able to afford anything, and it just seems like maybe something's gonna give a little bit here, but I'm totally with you.
I agree. It has to give. I mean, you can't. Yeah. It has to. Listen. It blows my mind. You know, we're in the real estate business in a good way down in Florida, And we still cash flow all over the place, and for the quality of life, it's like so inexpensive, it's unbelievable. So it's hilarious because I'm actually going to end up going to those places and bring money in from there into here, because it's like when they see what you can get here, it blows your mind. It's like, you got to be kidding me, man. You know. Here, you stay right there, okay? We'll be coming right back.
Will do.
Our phone number is 877-927-6648. Dow Industrials right now are up, where are we? We're up 66, NASDAQ's up 30, S&Ps are up 7.5. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We're talking with Paul from San Jose, and we're going to be talking about REN, which is a Resolute Energy Corporation. They explore oil and natural gas. The low for the year out here is $1.23. It's trading at $17. So, man, what's going on with this stock? What's the big deal here? I know it just went from $2.80.
Are you there?
Yes, sir. Yes.
Oh, okay. Sorry about that. I think my phone cut out for a second. But I've been day trading this thing since around the 11th of July.
Okay.
Almost every day, and it looks like it completed a nice ABC up. And I'm just wondering, when it completes the ABC up, it's extending off of that quite a bit.
Yeah. Okay.
How do you see this?
Okay, let's look at it. So if it does more than a 1 to 1.618. That's when you get an immediate change of trend. The probability is pretty high of that. So 284 would be A, $2.84. 829. Okay, 1 second. Hold on. 284. 829. yeah, is B, minus 2.84. So it's 545 times 1.618 is $8.81, and the B point is 572. One second. So plus 5.72 is 1453. Okay, so it hasn't done that yet. It hasn't done a 1 to 1.618. Do you remember what I said was the A to B? How much? 1 second. I'll do it this way. 829, 284, 8.29 minus 2.84 times 1.618. It has to go $8.81 or above. Oh, I guess, no, it did do that. Yeah, it did that. Yeah, so it's over 0.618 right now, 1 to 1.618. You know, I wouldn't be shorting this, though, that's for sure. I mean, it looks to me, is this something that is real, or is this just like what happens many times is that, you know, you get a good trading stock and every day traders trading it and just keep running it?
That's what it seems like. I mean, this thing started popping up on the scanners. I know a lot of day traders are talking about this in the chat rooms, and it's just been, like, for the past week and a half, this is the only thing I've been trading every day.
No, listen, I've been there. So I would just, you know, now you're at the point that you're getting close to that. So even when you're day trading it, what I would do is every time you buy it, you're going to put a stop right underneath it, because what will happen is this, is that you're going to see this probably get a little bit higher and then go down $5 in one day, intraday. You know, because stocks don't do this. Well, they do it, but they do it when it's, you know, a good pump and dump. I mean, you know, so it's like, okay. But if what happens, folks, is that when you get a trading stock and you get in the rooms, it's like, that's a no-brainer. People walk in them on and say, oh, great, I'm going to buy 5,000, 2,000, 10,000 shares. And, you know, at a $17 stock, you can do that pretty easily. And then you run, take it quickly, and then all of a sudden it's over, you know. So.
When you look at the volume characteristic of something like this, when it's doing this much volume, which is way out of the normal,
right,
going back, even when this thing was in the $40 range,
right,
do you think this thing would have a chance to get back up to ice? It looks like it broke down from like around 44. I mean, I'm talking over a long-term time frame.
No, this is a good start. No, what ends up happening, it does start like this. This is how, you know, even this won't be, I mean, even if, let's say it falls apart again, it goes back to $8, you'll end up buying it again. Maybe I'll buy it too and trade it. I mean, that's, it has the characteristic that Yara can get to ice, which is a mind blower. $32.25. Yeah.
Awesome. Hey, thank you, Tom O'Brien.
Okay, man. Have a great one, Paul. Have a safe one. You stay right there, folks. We'll be coming right back at the 4 o'clock hour. Dow Industrials up 59. Nasdaq's up 29. S&Ps are up 7. We're going to be right back, folks.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Alex in Newton. Hey, Alex, what's going on, brother?
Hi, Tom. How are you doing?
I'm doing great, man. Yourself?
I'm doing pretty good.
Good, man.
Subscribe for your gold report. I've been following you for a while. The first time I subscribed for it. And what I love about your gold report is that you give us a direction. You give us an overview of the whole market, and you leave final decision to us because you give a lot of ideas. After that, you can choose whatever you want to follow, whatever you don't.
Yeah.
That is great.
Okay, brother.
Thank you.
Have a great one, man. Have a safe one.
Thanks.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great week, folks. Let's kick it in the right way. Don't take anything personally. Become immune to poison. The whole world can gossip about you. And if you don't take it personally, you're immune. Immunity to poison in the middle of hell is the gift of the second agreement. How's that? Market-wise, let's take a look at it out here. We had the Dow Industrials up 59, NASDAQ up 29, S&P's up 5.5, gold contract up $1.50, trading at $1,344 an ounce. Silver down 11 cents at $19.81 an ounce. Platinum off 12 bucks at $11.11 an ounce. Copper flat at $2.15 a pound. Light sweet crude up $1.45, $45.89 a barrel. Now, the oil market, folks, is right into ice. You get from about right where we are right now to about $1 higher. Ice specifically is running into resistance where it broke down from. So it's going to be, excuse me, folks, intriguing watching the oil market here the next few days, particularly oil numbers come out 10:30 Wednesday morning. You can expect some high volatility as we come into the $45 to $46 area. Notes. The 10-year note was down 10.6 today, 132.06. 30-year bond off 1.5 points, 171.20. Both the notes and the bonds came down on anemic volume. What is that saying? That's saying they still want to go higher, higher yield, higher price, lower yield. King dollar. King dollar down 117 ticks, 95.56. King dollar rejected lower price again, once again, dramatically lighter volume. Did all those 7,500 contracts. The euro is trading at $1.11, and the yen is out there at 101.23. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's see, what do you have? You have distribution in spades. That's what we have. That's what we have had since July 14th. July 14th, the high in the the SPY is 216.67. You're at 219.09. We did 48 million shares out here, anemic volume, but guess what? You're at a higher price, so you can crawl higher tomorrow. The NDX 100, what do you have? The 3 Qs. 3 Qs did 11 million shares out here, 11.7 million. You're at a new high, 117.70. That's saying that can go to another high. Same type of setup, though. You're up at levels. No one's in the store. They're buying the product. And guess what? They're going to get trapped like rats. The IWM. Now, the IWM got some juice into it. The small caps got some juice. You know, you get the volume. Volume did come in it. So the high of today will get tested on the IWM. That's 123.68. We hit 120. Well, that's what we hit today. We closed at 123.40, but you had an expansion of volume. Did 19 million shares. Gold contract. What do we have with gold? Gold contract, folks. Sideways move out here. Not much action. 117,000 contracts. We're trading at 13.44. My take is that gold wants to run down as this 13.18 area. More than likely, we're going to see it somewhere around the 12.88 area. And that is where we broke topside from on June 24th. You know, this thing is stretched. If you look at the XAU, the HUI, you're going to see the same type of setup. They start turning this morning. And if you happen to be in the metals market, you know, what you may want to do, there's some good. What happens, folks, is that in South Africa, the stocks trade way before we're opened. And what tends to happen is that they like to go where the metal's going, of course. But when they don't, that's a big heads up. And this morning, what you had out here, and you can go to that Johannesburg exchange, and it's free. You'll see that the metals, the metal equities, were trading in the negative when, in fact, gold was still up $4. That's a big heads up. It's just it's a lot of great information that you can get for zero before our markets open. Silver. What do we have with silver? What do you have with the silver contract? Silver contract out here today was up 17 cents. Did 42,000 contracts. This also wants lower price. You know, the run has been extensive. You know, we'll see how it handles the lowest swing point. Silver's kind of almost next to this lowest swing point. We got down to $19.70 today. The low of that swing point is $19.27. And when silver moves, whether it's up or down, folks, it moves with monster velocity. I mean, big time. Oil. What do we have with oil? So we take a look at the oil contract. What you're going to see, oil was up big again today. In fact, it's been big for 2 weeks, okay? On the 3rd of August, it was trading at $39.19. Now, you're coming right into ICE. You know, the ICE is laid out. We're at the bottom of it right now. It's just 45.84. The top of it is approximately 46.94. So call it $47. So right in this area, this is where, you know, you're coming into monster resistance. That supply line, in this particular case, goes all the way back to the April 29th area. You know, so we'll see how it handles that supply line. And as I had said at the beginning of the show, Wednesday, 10:30, that's when those oil numbers are going to be coming out. The notes and bonds pull back today, dramatically lighter volume. Just to give you an idea, the 10-year did 742,000 contracts versus 1.3 million. That's what it's going into. The 30-year did 152,000 contracts, pull back almost a point and a half, and that's going into 252,000 contracts. So bottom line, I expect both of those to turn higher once again. King dollar, good old king dollar. What do you have with king dollar? King dollar right now, folks, is trading. It got to a low today of 95.42. It is trading trading 95.58. You did 7,100 contracts. That 7,100 contracts is coming into 21,000 contracts as well as 35,000 contracts. So bottom line, I expect what you're going to see is a good old king dollar here is building cause for what? It's building cause for higher price. That's the way that it seems to me that we're looking out here. If we do go over to the PP, you go take a look at the platinum. What you are going to see is that platinum, even if we do let's look at the PP LT right now, which is the ETF, platinum is not only off the highs, and this is a good clue that you're going lower. Platinum came off its highs with monster volume. You know, the PPLT was a high of $113.77. That was the high established on the 10th of August. It makes a high with 46,000 shares. First day it comes off with 72,000. Second day with 149,000. That's not a good scene. You don't like seeing equities come off highs or corrections with volume picking up. You stay right there, folks. We'll come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. And what we have is you're going to see, so the 13F filings, folks. What the 13F filings are is that anyone that has a large portfolio over $100 million, what they have to do is they have to file within 45 days of the end of the quarter what they have bought and are sold. And what you're going to see out here, there's quite a bit that's happening. If we go take a look at Apple first off, let's see where Apple's gone. So Apple, the last quarter. So this is applicable. These numbers are applicable from, let's see, June. So April, May, June. It's the April, May, June quarter. So if we go back to April 1st, yeah, so April 1st, Apple's at 110. And then we go over to June 30th, so 110 to 92, and right now you're at 109.48. What we're going to see is that, let's see this, good old Berkshire Hathaway, they've been, you know, now Warren Buffett, he has a couple new managers that are managing separate portfolios. He was always saying can't stand tech, but the bottom line is that they've been accumulating Apple for a while, and this is almost like a double down. So Warren Buffett's Berkshire Hathaway increased its investment in Apple during the second quarter as the iPhone maker declined. Berkshire held 15.2 million shares of the company as of June 30th, compared to 9.8 million shares 3 months earlier. So you get, let's see, that's they bought 5.4 million. So they did. They put another third in. So let me just look at this for a second. So AAPL. This is all you can glean quite a bit of information out of these if you continually look at them and you stay with the same equities. You know, it's still a probability game because what does happen is that you don't know what they've done in the last 45 days. But in Apple's case, you know, the bottom line is that this has been off a high of 134 and it really hasn't gone anywhere. So we'll see where that does shake out. One of the Netflix, NFLX, I believe, you're going to see a lot of these come out today too. NFLX. Yeah, now the Tiger Funds, okay, this is Tiger Global Management. This is a huge, there's a lot of Tiger Global Management. There's only one, but they have a lot of funds. And this was a big sell down, PHDC. What we have is this. This sell down here, you're going to see this, Tiger. So if I put this on up. Yeah, this is a complete sellout. Tiger Global Management sold 17.9 million shares, sold the whole position. Viking Capital sold 1.7 million. Jennison sold 1.4. A lot of sells. Let's see if we get any big buys. So there you go. No. So here, watch the differences. This is pretty amazing. The largest sell. Now, this is the supply and demand issue, right? Largest sell would be Tiger Global Management. That sold 17.9 million, almost 18 million. And the largest buy was 4 million. So if we go take a look at Netflix, now what does happen is this, is that this, you know, we had some of these numbers on Friday. What does happen, folks, is that you have to do it within 45 days. Some do it a couple of days early, but this is the 45th day, so all of these are going to be public today. They've already filed, but then the SEC has them public. So if you take a look at Netflix, you can expect there's going to be some downward pressure on this tomorrow. It's down $1.38 today, and one of the main reasons is that as large fund managers go through the filings, they're looking for, okay, who's buying, who's selling, and then they try to figure out, okay, why? What do they know that I don't know? Meaning on the buy and or the sell. If we go over to Amazon, what you did have is that there's a couple swap outs, and a couple guys came in pretty big on Amazon. Let me see this. 630 Emerald acquisition. That was 670,000 shares. Yeah, see, okay, Tiger was one of them. So Tiger Global, they were selling Apple and they were buying Amazon. They got a $1 billion position now on Amazon. They bought an additional 421,000 shares, of course, at a stock that's $700. Bottom line is that we can go through a lot more of these. Let's go to the GLD and see who's in, who's out. Actually, you know what I want to do first? ABX. The reason I want to go to ABX is that's Barrick, okay? And one of the large owners in Barrick happens to be George Soros and Fidelity, and you want to know what they're doing. So Fidelity is a buyer. Fidelity bought 17.9 million shares. Soros, where are you? This will be interesting, okay. This would be really weird. One second. Soros. What I'm doing right now, folks, I'm looking for Soros because he had a huge position in ABX. Either just missing it or... Okay, I'm gonna have to check this at the break. That's kind of weird because I don't see it there. Let's go over to the GLD. So we'll see how Paulson is doing with this GLD. So okay, so in the GLD, the buyers, let's see. A lot of buyers, no doubt. You had CI Investments. They almost doubled up. They bought 5.9 million. Wells Fargo bought 5.5. Bank of America 3.1. None of those were new positions. They kept adding positions. Let's see who the sellers are. Fidelity's a seller. Okay, Fidelity sold they sold a third of their position. Bank of Nova Scotia sold just about their whole position. Sun Valley. Oh, this one's really interesting. So check this out. This guy, Sun Valley, this is one of the best money managers out here in the metals business. Sun Valley LLC. He sold everything. He sold 593,000 shares. Wild. We'll go through that more a little bit later. Our phone number is 877-927-6648. We go over and take a look at some of the higher volume stocks out here. Well, let's go look at Twitter, TWTR, because Twitter out here today, you talk about a little juice underneath it. It was up $1.32, and Twitter in talks for Apple TV to stream the NFL. Bottom line is that you get some juice underneath this thing. This is off the bottom of $14.17, which is 3 weeks ago. $20.86. Yeah. Hey, listen, Twitter wants to go up to $26. It's pretty intense. You stay right there, folks. It's Tom O'Brien. This is TFNN. I'm going to come right back. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we had the Dow Industrials close up 59, Nasdaq was up 29, S&Ps are up 5.5. And as you come over to our website at TFNN, folks, you're going to see right in the top of the carousel, a man, Mr. Basil Chapman. He is going to be doing a 90-minute live event. This is going to be tomorrow night, 6 to 7:30 Eastern Standard Time. What he's going to be talking about, new highs to come, a 90-minute live event with our man, Mr. Basil Chapman. Now, this is a subscriber event, folks. You can be a subscriber right now, absolutely free. The way you do it, you come over to our website at TFNN. You can subscribe to Basil's newsletter, 30 days, absolutely free. You get in the workshop tomorrow night, which goes from 6 to 7:30. Now, if you can't make it live in the workshop, we have some great technology. We archive it. You can access it as many times as you want for 30 days. And what Basil's going to be talking about is this, okay? As he usually does, Basil's going to cover the current period of accessibility, the implications of this is going to be an interesting one. The implications of of being isolated, low interest rates, and of course his talking about record-breaking skyscrapers, $4 or $5 million luxury cars, what that all means, and where you're at in the mega bull market. And so Basil's always put together, folks, many times that as buildings, skyscrapers, things get out of control around the world, you come into very big tops and or big bottoms, depending where the whole thing is coming from. And you know what is amazing, depending on how long you've been listening to TFNN, in general, Basil, before anyone was talking about the Japanization of rates across the world, well, he was talking about that was going to come to the United States, and it's like, what do you even mean? Guess what? That's what's happened. There's no two ways about that. And in our case, they're still positive. So our 10-year rate is still 1.55. Now that rate is actually a very high rate in the aspect of first world. When you look at first world, it's like, okay, you're giving them money to the U.S. government for 10 years. You're not only going to get your cash back, you're going to get 1.5% interest on it. And what tends to happen here is that, if we're in the UK, you're only getting 0.5%. If you're in France, you're getting 0.1%. If you're in Germany, you're paying in order to have someone hold your money. Okay, so one of the deals that are on the table here go like this. And what it is that in order to buy U.S. bonds, or in order to buy equities in the United States, or real estate, or anything, okay, but we'll stick with the bonds here for a second, is that you need U.S. dollars. So what has happened in a huge way is this. Picture whether, if you're in Japan, it's negative also. In Japan, and the trust companies in Japan are buying our bonds hand over fist, and they continue. But so picture what happens is that they get yen deposited in their banks. That yen has to change into U.S. dollars in order to get the bond. So with the same type of duration, meaning that the Bank of Japan sells 10-year notes. They sell a 10-year note. You have to pay them for the honor of lending them money. Then what ends up happening? That 10-year note, they turn, okay, good, let's go make 1.5% in the U.S. They have to change it into U.S. dollars in order to do it. Now let's go into the dollar, because that every time that I kind of look at the aspect that, okay, number one, where are interest rates going? And number two, where's the dollar going? Let's say about a year ago, I'm looking, I'm saying to myself, well, this is really weird, because it looks like the dollar still wants to go higher, and yet interest rates want to go lower. And that's divergence, because you think that if interest rates are lower, the dollar would go lower also. But I can make the case, I've made the case in my own head, that I can see how the dollar is going higher, and it has to do with they just need dollars across the world to buy our treasuries. That's kind of where this thing is going. It's not the fact, like most of the mantra out there would be that, no, when interest rates go up, the dollar would even get stronger. Well, you can almost make the opposite case of that. That if interest rates, go up and the bond market gets crushed and everyone turns in their notes or their bonds, or either or, what ends up happening? If that money gets put back into the country of where it just come out from, guess what? It's just the opposite. So, if we go take a look at this dollar, right now, it continues to reject lower price. It has lighter volume, and it's like, this thing wants to go topside. And if that goes topside, the leg, when we went up on July 25th, we got to a price point of 97.62. If I put this on a continuous contract, and just continuous contract means a longer type of contract, you can string them together, and we put this on a weekly, what you're going to see is that, the last pullback was hardly nothing. We hit a low May. So now we're in August. So May, we're at $91. Well, we're at 95 right now. When we went topside in June, you actually broke the downtrend all the way up to $99.95. So thus far, there's a good probability that this dollar wants to run to $99.95. Now, it's not, if it runs there, it's going to go whack 100, because if we go back for the last 2 years, your first high established in the dollar was 138 cents. That was established in March. We stayed up there in April. We hit 100 again. Actually, this is a weekly. Okay, so 2 weeks in March we hit 100. We pulled back down. We hit 100 again in April of 2015, Then you had a deep retracement. You got back down to 92. You came back up. You hit 100 in December of 2015. So the first one is March of 2015. Last one was December. And now, we'll see where this thing shakes out. But that's telling me that that little baby does want to get up to those levels. Now, simultaneously, when you look at the bond market, bonds wanting to go to higher price is saying that this market wants to sell off. Now, in the summer, Mondays and Fridays, you're going to have light volume, not a lot of time to basically go higher or lower with volume. Tuesday, Wednesday, and Thursday, however, you got action. And the way that we're setting up date-wise right now, it would be really, if we don't move, let me just see this calendar for a second, because if we don't move, we haven't moved since July 14th. And if we don't move this week, we won't move next week. If we don't move this, so this is pretty cool. So the way this is set up right now, we have the 15th to the 19th. Next week, window dressing starts again on the end of next week. And then you have Labor Day, and that would be saying that, guess what? You can go sideways until after the Labor Day. Pretty wild. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. The Dow finished up 59, NASDAQ up 29, S&P's up 13.5. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go over to the UK and take a look at some of the foreign markets. So in the UK out here today, folks, we had... Okay, so the FTSE was up by 25 points. We're at 69.41. This has also been a one-way ride since the 24th of June. Brexit. On Brexit, the FTSE went from 6,300 to 5,700 and then just blasted off to 6,900. Pretty amazing actually watching this thing shake out. So that being said, if we put this on a longer-term chart, what you're going to see is that this thing's going after its highs. You're at 6,941. The last high, I believe this is going to be the high, too. Let me go back 10 years. Oh, this is going to be pretty cool. So check this out. So when we go back, what you're going to see is that you're over the 2007 high, which is 67.54. Yeah, and you're going for the high. You're going for the 71.22. You know, it's been a long time coming, but the bottom line is that that's what it's done. If we go to the DAX in Germany, now the DAX in Germany likes to trade like the NASDAQ. This was up $25 today, or 10,739. Big difference here, though. So the high in the DAX is 12,390. Bring this a little bit closer. Yeah, the DAX has a lot more work to do. Well, put this on a weekly. You know, so the next run for the DAX is 11,430. If we go to China, now last night in China had some good action last night. This is pretty... So the Nikkei was down 0.3%. Taiwan was off 0.5%. Hang Seng was up 0.7, but Shanghai was up 2.4%. This broke out, so it's going to be interesting to see where this shakes out tonight. So we're trading at 31.25 in Shanghai. If I put this, and it had volume. So we did 29 billion shares taken out. Oh, interesting, man. It took it out, and it took out 30 billion. But that's close. That's going into swing points with volume. 30.9 million was the high April 13th. We did 29.3. If I put this on a weekly, what you're going to have, yes, this would be wild. This looks like it wants to, it's going to try to climb up to 35,000. It's pretty intense, man. I'm not quite sure what jammed, you know, the Shanghai market last night, but something did. If we go take a look at the Nikkei in Japan, Nikkei in Japan was flat last night. That doesn't have much juice underneath it. You know what's amazing, folks, is that you want to get some interesting reading. And, you know, in the Journal this morning, Wall Street Journal, they had an article about the Bank of Japan and the amount of, so picture, so if we start talking about quantitative easing, meaning central banks first buying debt, which Japan is like ahead of everyone by like 20 years because they've been doing it that long. So what they first did is this. First they were buying bonds like our central bank is buying bonds. That started over 20 years ago. Now what the Bank of Japan does is that they buy ETFs. Well, the ETFs that they're buying are the ETFs that trade on the Nikkei. So just as our ETFs, let's say whether it's the Qs, the Diamonds, the SPYs, right? You buy the ETF. As you keep buying shares of the ETF, the ETF is buying the actual equities. Well, what this article is about is that, number one, how much the percentage of the Bank of Japan owning the ETFs and, in fact, owning their own stock market. I mean, you got to read this thing because it's insane. It's like, okay, so what happens when, you know, they end up owning 20, 30% of the stock market? You know, It's just like it doesn't even. It's not even. It doesn't even seem real, you know. And they're claiming. Well, not they're claiming. They're doing this to kick in inflation. Well, buying the bonds didn't work, so now buying the ETFs. We'll see whether that works or not. It's something that we do want to keep our eye on, particularly because thus far, it's not. As far as we know, our central bank does not buy ETFs and equities. You know, doesn't. I don't know whether they have to disclose it if they do or not, but the bottom line, as far as I know, at this point, they don't do that. What does happen with the bonds, that the bonds really made sense in the context that they hold the bonds, they get the interest, and they're never going to put the bonds back out in the marketplace. That's where that whole bond deal goes. The equity part of it just blows my mind, you know, because if we go over to the Nikkei again, so look at this Nikkei again. If you look at the Nikkei, and you have the Bank of Japan buying their market, I guess everyone else must be selling, because we just went from, in June of 2015, the Nikkei was at 20,900. They call it 21,000. Well, we're at 16,800 now. Can you imagine if you didn't have a buyer in it that was in there every single day? Pretty intense. So, monetary easing, numbers, all of the above. I'm not quite sure why these rates stay low when this happens, but we're in a brave new world out here. And it looks to me like it's going to be there for a while. Let's go take a look at ABX. Well, no, actually, I'm going to do Newmont. We'll see whether you have any new buyers or sellers inside of Newmont with these 13F filings. In Newmont's case, let's see, buyers, 630. So you got Westpac Banking. That's a new buyer in Newmont, 2.7 million. Humbro Capital, 1.9 million. Janus Capital, 1.3. That's one of their funds, probably. Vanguard, 1.2. That's a fund. Now let's go see the sellers. Global Theramatic, they sold all their shares, 1.9 million. American Century sold over half, 1.8. Now, American Century, that's a big one because that is one of the large mutual funds. That's in California. Bank of New York sold 1.8 million. Neuberger Berman sold 1.2. Not the end of the world. Then you had a lot of other sell. Gamco sold 581,000. We'll go to Gold Corp and take a look at Gold Corp as to who the buyers are, who the sellers. Gold Corp, the changes in ownership go like this. You had, oh, they're lucky. They got a buyer. Look at this. 13.3 million. That's Arrow Street Capital. They had owned 3 million. They came in with 13 million. Big number. You stay right there, folks. We'll be coming right back. Our phone number is 877-927-6648. Dow Industrials closed up 59, Nasdaq up 29, S&P's up 5.5. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So check this out. This is, these 13F filings, man, are so cool, folks, because, when I first started the Gold Report in 2001, the only large company that was in the gold market in general was Fidelity, owned about 5% of Gold Corp. And then you had George Soros in the market. So I got to watch them and his sons real closely going right from 2001. And what happened is that I watched, they were buying, but guess what? They're traders. They were selling like crazy, okay? So let me show you this with Barrick, because this is what I've been watching like a hawk. If you get the Gold Report, you know this. You really want to keep your eye on this, because there was huge amount of press that George Soros gets in the gold market, buys 19 million shares of Barrick Gold. Well, for all you folks that are in the market, the expansion was about as cool as you can get, meaning from the highs to the lows. In January, Barrick Gold was $7.59. In July, it was $23, okay? So check it out. When we talk about the last time that we had any volume inside Barrick Gold's trading at $15.52. Well, guess what? So PHDC, the 13Fs just come out, and guess what? Soros, folks, dumped 18,348,000 shares. That's as of the 30th of June. So he only had 1 million shares left, and I'm sure they're gone too. Now, what you're going to see here, this is what's going to happen here tomorrow. Because of the fact, when you go back, and this is how markets work. You pump them up, get them going, everyone else goes in, and then you wonder, why things go down. Because that is a true operator in an equity, and Soros was the operator in Barrick. So when you look at this, the high was generated on July 6th. Now this filing was as of the 30th of June. So the 30th of June, these closed at $21.43. Well, what has happened, and this is no whole, silver and gold market too, it hasn't been able to move. And my take is that guess what? Because it's pure distribution. So now, folks are caught at highs here. There's other operators that I'm sure came in, but no one bought that many shares on the way in versus what he was selling. So what you're going to see, more than likely tomorrow, I'm going to go through a bunch of these as soon as I get off the air here tonight. You're going to see a downward pressure because right now, I believe it just got reported. Let's see. Soros. Yeah. So at 14:20, well, at 20 past 4 today, that was the first report that Soros sold. Okay. Now that's going to hit the market tomorrow. You know, we'll see what other equities inside the market in general that are going to go out there. But that's going to be in effect. And the reason it's going to be effect, of course, is that, you know, folks, there's some folks that like trading, there's some folks that like holding, and when you get a profit like he did, and we did, and, you know, inside the gold market in 6 months, you got to take it. It's not even close, because that was one of the biggest swings and the fastest swings in a very short period of time. You know, because many of these equities went up 150, 250%, and you can expect a pullback. And I suspect that these numbers coming out on a fundamental basis, that will put some pressure on the market, because there's many people, unfortunately, that come in after the fact and say, "Oh, George Soros is buying, we got to buy." You don't want to be buying. You don't want to be buying when you see the press that's out there, because that is the beginning of distribution. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night. Have a safe night. Look forward to speaking right back here tomorrow morning, 8 o'clock. Go get them, folks.